Welcome, everyone. This is Coffee with the Founder, where we explore why people do this thing called venture-backed startups in this wild space as it relates to fintech or clean energy or industrial materials and all the various fields that frankly can be venture backed because there's so many great things to fund in the world that need the funding from folks. Specifically with us today. Oh, and I should say I'm Beck Bamberger. I've been on a roll, Matt, today, so I didn't even get to my introduction. I'm Beck Bamberger, and it takes a psycho to know a psycho, so because that's why we're interviewing folks on here. With us today is Matt Pauker, who is the CEO and co-founder of Ivy Invest, which is a platform that is really offering people for the first time, as far as we know, Matt, as far as it definitely seems like, the ability to invest in things that otherwise family offices and very fancy people like institutions only get access to. So things that are not, frankly, public. And it's quite exciting. Thank you for being here.
Yeah, thanks, Beck. It's great to be here.
And thank you also for having your whole microphone set up and ready to go. Look at you.
We do a podcast as well.
I know you do.
Called The Investment Office. So I have my whole setup now.
Mm-hmm. So you are co-founders with our lovely friend Wendy. You two met. Bring me back to just when you met and why you both decided, yeah, we should do this.
Yeah, I met Wendy. So this is my third startup as a founder. I also spent some time on the other side of the table as a VC.
Yes.
At an emerging manager fund and was out spending a lot of time fundraising. I think a lot of founders don't realize how much time you actually spend fundraising as a venture capitalist as well. And so I was spending a lot of time pitching large university endowments, big foundations. And one of the foundations I pitched was this foundation in New York called the Mother Cabrini Health Foundation, which is where Wendy worked. And so
Wendy was.
Met Wendy while I was doing that and pitched her. And I don't think she was likely to invest in the fund at the time. But we stayed in touch. And I, through that process, had been noodling in the back of my head around the idea for what became Ivy Invest, which was, like you said, it was this idea that if you look at big university endowments, big foundations, they're some of the most sophisticated long-term investors in the world. And they have the returns to show for it. Like they generate really remarkable returns consistently year over year over many decade periods. And they're able to do that in part because they invest not just in stocks and bonds, but things like private equity and venture capital, private credit, and so forth. And I had this thought in the back of my head, I invest for the long term, right? My money is right. We, as we get older, we're all getting older here, but we have,
no one gets out alive, Matt.
No one gets, that is true. You can't take it with you, right?
You really can't,
we're all investing for our retirement, or I have a son. I hope to leave him some, and the thought in the back of my head was, well, why can't I invest my long term capital the way that these very sophisticated investors do? Like, it seems fundamentally unfair that in some sense, like all the good stuff is only available to these really wealthy institutions.
Yeah.
We're already kind of wealthy, right? Like, what about the rest of us? And so I had this idea in the back of my head and had been noodling on it and went back to Wendy as I started to think about building this business. And I said, hey, I have this kind of crazy idea. What do you think? And to be
clear, Wendy comes really from institutional capital, has been on that side making these investments for a very long time. So she's on the other side of the aisle going yes, we do make a lot of money when we get to have all this access, right?
Yeah. And, she spent, 17 plus years doing this. And I think she may be the first kind of true institutional LP turned tech founder in history. It was, she sat in a very
It's rare.
Seat. It's rare.
It's quite rare. Yes.
She went from, in some sense, the top of the totem pole down to,
No, Matt, the top of the totem pole is the gazillionaire billionaires who are like, oh, here's my money. And then they give it to, the institutions that then put it to the VCs and the VC. But yes, it is quite rare, just to tell everybody on here in case you're unfamiliar. Yes, you'll see VCs go on to the op side and they start a startup, or you see, very often the founder, they go over to the VC side, or they do the EIR, they're going to be an entrepreneur in residence. But quite rarely do you see LP coming down and going, not to VC, but going to the actual startup. So she hopscotched quite remarkably.
She did, and so that was, but that was key here because a big part of our business is technology, and our third co-founder Arash is our CTO and has a long background building consumer
Yes.
software, and so that's a big piece of what we do. But you couldn't build this business unless you had somebody of Wendy's
Yeah.
caliber and with
Yeah.
Wendy's experience in network to bring the investing piece to it.
hmm So that is now the promise with Ivy Invest. You can go on there. You can be, and there actually isn't anything minimums. It's not like, oh, well, I have to have $100,000 or something. I can invest in there and have access to quite some alternatives that I would otherwise not have unless I was the Harvard endowment or MIT's endowment
That's right, yeah, and
or
and that was
family
a big
office,
piece that.
etc.
Yeah, exactly, and in some sense, this business would have been built easier to build if we had built it for rich people. Like, there
Yeah.
are a bunch of hoops we had to jump through with, registering a fund with the
Yeah.
SEC, and there's all kinds of compliance and regulatory requirements that we have to meet in order to deliver, to your point, a product that doesn't require somebody to be an accredited investor. It
hmm
doesn't require you to have some minimum net worth. And yeah, our minimum investment is $1,000. And so it's really designed to be accessible, we hope, to everybody.
Mm. Mm. Okay. So Matt, you have something I say called, founderitis, which is you do a company, you come back, you can't help it. And then and I have to come up with a new term, which is something of like, oh, and then you did the VC side of thing. And then you're back. I'll have to come up with a new diagnosis for this because it seems to be prevalent and it just keeps going on and on. At this point, what do you know that you didn't know with your first or your second or your other experiences that you had with previous companies?
Part of it is, I think you learn you get good at knowing what you don't know, and I think that's
True.
actually the key to
Mm,
being a founder is
mm,
you have to figure out what are the things you don't know, and where do where do you need to go spend time learning, or where do you need to go
mhm,
spend time going to the network and
mhm.
getting folks to help you. But the the first my first one I started, I was 21 years old, and I didn't know much.
Is this the voltage
This is Voltage
security?
Security, which was
Yes, which got acquired by HP. Not
yeah,
bad.
yeah. That was a long run. Took us 13 years to exit, but a great one. And
That's nothing in VC landscape.
well, it's funny, right? Because we all hear the stories about you know the quick wins, but the truth
Yeah,
is, a lot of them are slogs for a while, and that one
yeah,
certainly was.
10, 20. Yeah, years.
Yeah,
Hmm.
sometimes, right? And
Sometimes.
but the advantage of starting a company when you're 21 years old is you're 21, right? You have infinite energy. You don't
Infinite. Yes.
you don't even think about, like, failure is just something you don't really even think about, right? It's just like,
Yeah.
oh, you just pick yourself up another day, and so you know that made that one easier in some ways. But then, of course, on the flip side is, 21 years old, you don't much anything. But I was really fortunate. We surrounded ourselves with a great team there. Had a great team of seasoned, a great seasoned executive team that we built that helped us build a really successful enterprise software company.
Hmm.
Now I'm 44 years old. I
Young.
certainly have a greater appreciation for consequences now. But I like to think that I've learned a few things along the way, and each one gets a little easier for sure.
Hmm. Hmm.
But again, I, for better or worse, have never gone and built the same thing twice.
That's true. Because your other company, which was acquired in 3 years with Coinbase, was totally in a different realm.
Super different. That was it was basically the second venture funded business in Bitcoin, but in
Yeah.
many ways it was a semiconductor company. We were, for
Yeah.
a time, the second largest Bitcoin miner in the world. And so, there are obviously commonalities in building companies, regardless of what you're building, as you think about how do you hire people and build a team
Yeah.
and so forth. But, like I said, for better or worse, I have done different things over the years, which, for me, it keeps it interesting.
Hmm.
I don't think I'm the kind of person who could go and build, the same thing two or three times.
Who does, Matt? I think. I mean, every
Well, listen, I actually think it's a much better path to success. I mean, in terms of
You
of
could. But you know what? Now, okay, this is me, the academic, like coming in and going like, what is the correlation of founders going to the next company or the third or the fourth and doing it so closely in the same realm? Because I would definitely say, now this is just my hunch, that you see, yes, correlation, it's kind of similar, like my experience, but there's big jumps to different arenas and
there,
industries.
there, I think there's some
Hmm.
class examples. Obviously, like,
Yes.
you think about Salesforce and Oracle. You think about
Yeah.
Workday and PeopleSoft, right? Like, there are certainly,
Yes.
and listen, I think there's no question that if my second company had been another cybersecurity software company, it would have been a lot easier because I would have had a whole network of customers I could call
Right.
on. I would have had
Yeah.
a whole, a playbook to run. But what's the fun in that?
Exactly. This is a hallmark of founderitis. What is the fun in that? Doing the same thing again? No, I got to bang my head against the wall for a little bit. That's the fun part. Figuring it out, or is finding a product market fit, which someone else on this podcast was like, oh, and then the real hell begins. I'm just like, yep, that's right. That's right. It's not fun time. It's not fun time when you're getting inundated with the fit. What recently became clear for you, Matt, in doing this or just in life? What would you say? We like some deep questions
We
here.
yeah, I mean, for this one, I would say we made an early bet in this business
Mhm.
that uh, the trend was going to shift towards individuals wanting to have more access to these private markets opportunities,
Mhm.
right? That the future of investing was not just going to be stocks and bonds, but it was going to be all these alternative asset classes. And I
Yeah.
think, you know, we took an early bet there, and I think we were right. And I think we've been actually really surprised at how quickly the the investing world has already been moving in this direction, right? Like the most recent example,
Mhm.
you know, Morgan Stanley just announced the acquisition of EquityZen, which is this platform
Yeah.
for employees or early investors to be able to offer and sell
Exactly.
shares.
Exactly.
And
Which
I think
was kind of
it's
like everyone was, oh, dang. Yeah.
yeah, I mean,
That was a
and
big
that's
moment. Yeah.
yeah, it's a big deal because historically these kind of secondary shares marketplaces,
Yeah.
were
Doesn't.
more of a niche product. They were startups
Mhm.
that offered these, and for a Morgan Stanley, right, like a
Yeah.
like a
Exactly.
huge financial institution to come in and say, we're going to buy this, and presumably, I don't have any inside information here, but presumably because they want to be able to offer their clients
That's right.
differentiated investment opportunities, right? Like that's a big deal. And then between that and then all the activity we're seeing among the big investment firms looking to add private markets to 401k plans, right? Like there's just
Mhm.
been this huge shift just in the last 9 or 12 months of I think folks agreeing with us, which is
Yes. Okay. So let's talk about the tide winds of that because yes, what you were just referencing for those who are not familiar, it's like, oh my gosh, 401ks, which are like, the standard of investment vehicles for your retirement, whatever, like having some more of these alternatives, like this is like, that was kind of a moment where we were like, oh, dang. Why is that, would you say? In this like last year, have we seen that? And maybe it has to do with crypto, maybe it has to do with the macro tariffs or what do you think?
well, I think that there are a couple intersecting trends here.
Mhm.
One is, frankly, that a lot of the large asset managers, large investment firms, these big private equity firms, they're on the hunt for new dollars.
Yes.
Their
They're
customers,
thirsty.
excuse me, their customers, they're investors. Again,
Yep.
we're typically these large university endowments,
Mhm.
these large pension
Mhm.
funds, etc. There are not a lot of new university endowments being created every
That's
year,
true.
and so to the extent that these firms
Mm.
want to grow, there are not new big pools of money they can tap into there. And so, some firms, a lot of firms have been, for example, going going overseas to sovereign wealth funds, whether that's in the Middle East or in
Mhm.
Asia, and trying to
Mhm.
tap those dollars. And
Yeah.
that's one source of potential new dollars. But the other source that I think a lot of folks are looking at is, hey, there's, call it 12 or $13 trillion in 401k money that is essentially untouched for the most part by these alternative asset managers. And so I think that's one piece. It's just these alternative asset
Yeah.
managers thinking, hey, look, this is a huge pot of money.
This
But
is
then the
so
other piece,
yeah.
right? So that's the kind of the supply piece. The other piece on the other side is I think you have a lot of individual investors who are looking at the kinds of returns that private equity, private credit, real asset firms have been able to generate. And looking at the fact that like if you look now at companies in the US with $100 million or more in revenue, so companies of any meaningful size, right? The latest stat I saw was 87% of those companies are privately held. So, in other words, only
Yeah.
13% of those companies are public, which means that if you are only investing in the public markets, you're getting
It's
access to
limited.
really, yeah, you're getting access to a
Nothing.
small sliver, and arguably you're getting access to the less high growth sliver, right? And I think
Yeah. This is true.
and
Yeah.
when you look at obviously the big
Mm.
names in the news, right? Whether it's SpaceX and or OpenAI, right? These are all companies that are generating enormous revenues,
True.
seeing skyrocketing valuations, and maybe they'll go public at some time. But, by
But
the time they
maybe
go
they
public,
won't.
how much growth is left there, right? Who
Exactly,
knows?
exactly,
Right.
exactly. Ooh, Matt, this gave me a wild idea on just like how could you have like a fund? Could you imagine something where you're like, I want to invest in just small SMB America. That's my jam. I love small. I want them doing like, $1 million in revenue a year, 2 million, like nothing much, just like how could you get into that? Could you imagine where you're like, yeah, I'm invested in like 10,000 entrepreneurs across the US?
Well, it's funny, but it's funny. We have there's
Huh.
a part on our homepage, and we say,
Hmm.
invest in America, right? And
You do say that
again,
actually. Good tee
not
up, Matt.
there
Good.
you go, there
All
you go,
right.
right? And again, not we are not just investing in some, it is not a strategy like you described. It is not
Yes,
specifically like
it's
small
not.
businesses, but it is broadly recognizing and acknowledging the fact that yeah, like if you want to invest broadly across the U.S. economy, you can't only be investing in public markets. You're just going to
Yeah.
miss out on a big chunk of the economy.
Yeah. Your website actually says don't index in the market, index America. See?
There you go.
Invest yeah. 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 Oh, fascinating. Yes. Thank you for going over that and just kind of breaking this down. One thing I've been asking on this more often, Matt, and you could take the interpretation of this as you wish, like what's your hack or what's the thing you just like unlocked where you're like, dang, I just did this. Now, this could be maybe on your personal side or it could be in the business side, but really they're usually tied together as a founder. So what would you say? What's that unlock?
Well, I think that the unlock, and we touched on this a little bit,
Mm-hmm.
was if the thing that I've gotten good at over the years
Yeah.
as a founder is recruiting people I have no business recruiting to do things
Oh,
with me.
mm, do explain.
Um, and doing it in roles where I literally have no idea, right? So one of the things you just face as a founder, time and time again, often, is you have to go recruit team members, whether those are co-founders, whether those executives, whether they're just individual contributors, recruiting them for roles where you've never done the role before.
I know.
You don't know what
It's
you don't know what
really,
a good version of that person looks like.
yeah, it's very
But you
scary.
have to do it, and your goal obviously is to get somebody who is not just the average in that role, but like
The
the top
best.
1%, right? The
The
best.
best. Exactly.
And when I thought about building this business, right? Like we talked about earlier, like I knew that a key part of this was I needed a co-founder who was a chief investment officer, right? Like somebody who had deep experience. And
Mm-hmm.
I don't know how you do it. What does a chief investment officer do? I don't know. What makes a good chief investment officer?
Yeah.
But one of the things I've just gotten good at is I actually now have a process for like how do you do this, and I ran that process, and that was the unlock. Was I was able to convince Wendy to be part of the team here and to be that co-founder, and that was the unlock. But it took me it's taken me 20 years to figure out how to do that repeatably.
Okay. I like this unlock. Yeah, it's a very scary thing for a lot of founders where you're like, I don't know what the chief content marketer person does. I never done that role or whatever. And you're like, ooh, and I want the best, of course. Ugh. Okay. I like that unlock. And then also to kind of wrap us up for today, something I've been asking more on here because I want to get some juicy, big, eventual, 1,000-person response on this. So we'll get there when we get there. But who are you becoming, Matt?
I we joke on our team that I am the old man on the team, which
Well,
is too bad. I am
Matt,
the oldest.
no, please. Ageism is alive and well in San Francisco world. I'm telling
Oh
you.
boy, let me tell you.
Damn, damn.
And not by much. I'm not the old man on the
No,
team by
I know.
much, but I am the old. But what I will say is, I have um, I've been in this business now a while, right? I started the first one in 2002, so coming up on 23
Hmm.
plus years of building companies, and I've seen more than a few cycles
Yes.
in this industry, right? From when we started the first company, right? Like it was I don't, if folks who weren't around in 2002 in Silicon Valley, I don't think can appreciate how bad it was, right? Like just,
Oh
it was
yeah.
dead. Things were
Oh yeah.
dead. I mean,
Yeah. Yeah. Yeah.
I mean, we gave up half the company for $4 million, right? Like that's what valuations were like. So like I've seen the bottom, and then I've obviously seen like the
I know.
mania of like having people throw money at
Uh,
me, and I've seen it all, and so I've seen a few movies, and so uh, you know, uh, I remember early in my career as a young founder, there were a handful of folks who were great mentors to me who had been around for 15, 20 years in the business.
Mm,
And, they'd seen a lot of movies and they knew, when the guy jumps out of the closet with a knife and
yeah.
when you got to duck. And so
Yeah.
I'd like to think that the flip side of getting old is I am entering, a little more of that phase of my career where I can hopefully be of value to, other folks for whom this,
Yeah.
they're starting their first company, or maybe,
Yes.
it's their first entree.
Yes. Matt, thank you for being on and sending us your pearls of wisdom. Your pearls of wisdom from your elder millennial. It takes one to know one.
It takes one to
It
know
takes
one.
one to know one, my friend, or whatever category. I mean, what is
Well,
age at this point? I don't know.
geriatric. I think
Geriatric
millennial.
millennial. Okay. We'll just round you up to that. Oh my God. It is okay. On one last note, it's just like, it is so preposterous to me, Matt, how the generational divides are, when I'm like, there are things on this planet that are living hundreds of years, like their lifespan is hundreds of years. And also, of course, there's ones that live, like a fly, like 7 days. I mean, like, time is just an illusion is what I'm saying. So it's silly for us to think about just like, oh, well, this 12-year span of this whatever. Doesn't matter. The point is, Matt, thank you for being on here today. You are the CEO and co-founder of Ivy Invest, allowing people to invest in America with all those alternatives that you otherwise wouldn't be able to access as an individual person or someone just wanting to invest. How exciting.
Thanks, Beck. It was great being with you.
Thank you.